Hello there, my friends. Chris Marcus here with you on Thursday, August 10th, on behalf of Arcade Economics, where our goal is to help you thrive while we watch this dollar die. Wonder how much longer it will be. But in either case, until that happens, today we have a quick video on the rating agencies. The idea of a AAA rating, what it means, what it should mean, and really whether it's going to be doing you any favors to put too much stock into it. I preface this with saying my first job out of college was working for Moody's, one of the two main rating agencies. There's Moody's, S&P, and then the smaller third one was Fitch. I don't know if they've been accepted on the big league level just yet, but it was basically Moody's and S&P. And certainly over the past 16 years, geez, I guess it was 2001 that I started working for Moody's, fresh out of college, knowing very little about the world. Some might argue much like today, but hopefully we've picked up a few things of use since then. And I guess as I look back over that time, what really stands out, shockingly enough, is really what happened during the housing crisis, where so much of this paper that was AAA rated, which again, if you're not familiar, AAA is the highest rating, which means basically if you're buying some sort of credit instrument that has a AAA rating, the rating agencies are saying that, unless there's the apocalypse, these things are going to be good. As the great Rob Kirby, one of my favorite investors these days, mentioned in one of his recent interviews this week, the first problem that came up with that was back in, I guess this was probably 2007, one of those Bear Stearns funds. I think it was the Bear Stearns fund. But basically, one of these money market funds that was rated AAA essentially failed, which, according to Rob, and I would believe this, could have brought the entire financial system down right then. That was what started leading us towards the zero interest rates and all this unprecedented credit. But in either case, that was a big problem, saying that something AAA rated failed. Of course, a lot of those bonds were completely worthless, and a lot of printed money or tax money was used to bail them out. So avoided a technical default on a lot of those products. Yet, essentially, from the standpoint of what stock should we put into a rating, that still holds, where here it was, the rating agency said the best stuff was no bueno. Now, fast forward a couple of years later, what really started getting me ratcheted up was seeing how, as the thing collapsed, the U.S. started printing, borrowing, and it was around 2009 when I really started to have this different perspective. And so after studying that for a couple of years and seeing, geez, you got 20 trillion of publicly stated debt, another 100 trillion plus for the unfunded liabilities, the dollars being printed like it's complete insanity. How is this to call the U.S. corporate entity a AAA rating? It just seemed ridiculous. You're saying that of all the possible parameters and all the places you could lend money to, this one's the best, the one that has made it completely clear that not only is it, from a fiduciary standpoint, impossible to pay back that money. I don't even know if the intention is there. I mean, we're talking about government that when they reach the debt ceiling, they say, oh, well, they're all heathens or non-patriots if we don't just ignore it and borrow more. The plans, the budget plans that are presented, notice the plans aren't to actually cut spending. They're saying over the next 10 years, we're gonna run a smaller deficit than we did this year. So for that to be a AAA rated bond, hey, you can take your own opinion for it. One thing that was interesting was during that debt ceiling debacle in 2011, S&P actually did downgrade the U.S. from AAA, which I give them respect for. It was interesting, shortly after that, they were being investigated by the Justice Department. Make your own conclusions. I wish I thought some of these things were still accidents. For a long time in my life, I believed that. Wasn't always the conspiracy theory guy. But when you start to see who's making certain decisions, the names that flow in and out, and how the system is organized, well, that's the opinion I've been left with. So again, I just want to introduce the information. Take what you like and make your own conclusions. But in either case, that aside, to think that the U.S. government is somehow AAA, and of course that's aside from the track record during the housing crisis or some of the other things that have happened. And actually, if you've seen the movie The Big Short, great movie by the way, that I think is actually an excellent metaphor for what's about to happen. And there was a scene in there where a couple of the hedge fund guys, they go down to the S&P office and say, "Hey, these bonds aren't paying. How come they haven't been downgraded?" And there was a woman who just was the rating agency analyst, who the character in the movie was playing someone who was just completely overwhelmed. She'd just come from the eye doctor, could barely see, and presenting the image of someone that didn't have the means really to be rating all these things. That here's all these Wall Street dollars here, and then you have the grandma, if you will, at the rating agency's office. And I thought that scene was really fitting of just showing... Excuse me. We're going to be feeling better soon, though, so I appreciate you putting up with the coughing. But the scene was really, as much as it was a movie, really hit home to my experience of what it was like working in the rating agency, seeing the pressure that was often put on by the banks to get the rating they needed. Now, it's not to say that, and not to say that there isn't, but I'm not saying that there was, I didn't witness blatant, hey, we need this rating, we'll give you this extra cash for it. I don't know if that type of thing happens, but certainly one thing I do remember was the degree to which the rating agencies were leveraged against each other, saying, hey, you're not going to give us this rating, we go down the street to S&P, which is exactly what that character said in the movie. And one of the things that I found so fitting, perhaps the sad part, is that much of the investment world still looks to these ratings. I remember we had a small fixed income trading desk in the trading shop I was working for, and I guess this was probably 2011. And I remember sitting with this guy I was friends with at the time, and he was showing me some of the different names and credits they were looking at, and each time he would say, well, it has this rating or it has that rating. And I remember just sitting there thinking, wait a second, after everything that's just happened, are people still making investment decisions based off of these ratings, which have just been exposed as, I like to keep these things positive, but essentially worthless, in my opinion. Because for whatever reason, whether it's political or whether they just don't see any problem with U.S. dollar, the U.S. government, I mean, how do you have the AAA rating on that? And what does that say? So if something's rated less than that, does that mean it's complete junk? But again, that's the degree to which we're in a system where funds have to invest in things that have certain ratings. There are certain allocation parameters, and whether they're logical or not, that's the way the rules are set up. And so there's a lot of ingrained thinking that, all right, explosion over here. All right, now let's get back to business as normal. Not the way that I would envision it or I would set it up. But just a warning to be careful with those ratings. I think that when you have a bond bubble, again, does it matter if something's rated AAA or AA2 or 3? Probably not, but I think it's worth pointing out just because it's another part of this system that people take for granted and was really a costly mistake for a lot of people the last time. So I'd like to hope that we can all avoid that this time. And leave your comments below. Let me know if you have any questions on that. Not trying to give the rating agencies a hard time, but I feel my first responsibility is to provide some value that can help give you an easier time. So with that said, is what it is. Leave the comments below, and we'll see you again tomorrow. Thanks.